Morning and welcome to this week's market update. This isn't our usual venue, but hey, bear with us. Anyway,
switch it up here and there, you know.
come on. We're traders.
That's true. That's all we do.
But anyway, let's get into it. We walk you through stocks, currencies, commodities, and cryptocurrencies. Let's start with stocks. This week, the top performer was clearly the FTSE 100, up
Very shocking,
1 point something percent.
That is very interesting.
Tabs, you want to tell us what that's all about?
The weaker pound, of course, the negative correlation. That was the driver this week.
Uh-huh.
Mainly.
Uh-huh.
I don't know if there was much
currency
about
markets.
earnings, but then I just checked the pound. The dollar this week was just driving everything down.
100%. Especially with the story around the 10-year treasury yield, which breached the 3% level.
I will never forget that day. The way the Dow moved that day, and with I think it was Boeing's earnings, was it?
Oh yeah. Boeing's earnings. We had quite a few earnings, particularly in the tech sector. You had Amazon earnings too, but we'll get to all that. Anyway, we also saw the ASX, one of the top performers as well, currency related, and the US mixed for the most part, which is surprising because of the whole earnings story. Now let's zone in on the US. In the US, as you can see from the percentages really don't tell you the whole story, because you had a really great earnings picture, but it's not really reflected. We've got NASDAQ 100 down 0.17%, Dow Jones Industrial Average down 0.62%. You've got the S&P 500 down 0.01%. Right, strong earnings. Let's talk tech. You saw Amazon earnings.
I saw everything, man, from Amazon to Boeing to Caterpillar, but just because of the US Treasury and everything that happened around that, just basically neutralized everything. I was waking up, I'm expecting the Dow to really go up, but then this Treasury business is just taking down everything.
Very true.
Very shocking.
That's a good thing. It taught us an important lesson, especially when you're trading stocks. You can't do it in isolation to the bond market, because bonds are the alternative to stocks at the end of the day.
That is true, but looking at the past earnings seasons, last earnings seasons, we didn't have this happen. All we're focusing was earnings season, we expect good earnings, the Dow would rise 200, 300 points, break another record, but this time it just goes to show that you shouldn't be complacent.
But that's very true. But at the same time, you never had bonds so attractive in the market, ever. Let's talk Amazon. Did you see its reaction to the earnings? Up 10% on the day. Oh no, wait. Oh, I'm lying. Sorry. It was 6% actually. 6%, and I also saw an interesting headline, which was the fact that Jeff Bezos, CEO of Amazon, made $12 billion. That's billion with a B on the day.
Damn.
Insane. It just goes to show. I never really thought about the actual effect the stock price actually had on his wealth. But when you think about it, every 1% Amazon goes up. Every single day. Jeff Bezos makes $2 billion.
Shit, that is a crazy amount. After the whole Trump situation, the tweets a few weeks back.
Oh yeah, as in it's completely been erased. It's been erased by this game.
That's very interesting what a difference of a week makes.
Definitely. Yep. Yeah, especially in tech. The only company that disappointed this week was Microsoft, which saw mixed trade even after a less than expected earnings release. You've also got the fact that 80% of S&P 500 companies have beat their earnings estimates. This is more than you've seen in the past 2 years.
And to make it more interesting, I mean, it's not really reflected in the moves that happened this week.
Oh yeah.
Because I mean, you'd expect it to be like really breaking records, and I mean, like 1,000-point moves and 1,000 big major moves. But then, I mean, I don't know. It looks fairly not that much different from last week.
That's
These are
true.
not really major moves. I mean, the Dow is really down. S&P 500 is down. Nasdaq is down. It's volatility, man.
Yeah, I guess so. But hey, let's move on to Europe. Okay, so you've got the Euro Stocks 50 up 0.69%. You've got the FTSE 100 up 1.82%, and the DAX up 0.32%. With the European markets, the biggest story is the currency. I mean, there's not much else that's exciting.
I mean, have you looked at the technicals recently? I mean, the DAX and the FTSE, those technicals are very interesting. I mean,
DAX and FTSE, oh yeah.
I mean, I saw like earlier during this week, like around 12,400. And I actually thought I was gonna go below that, but then hey, I was wrong. It's like 12,500 something. And
That's
even
true.
the FTSE, this is gonna be a very interesting week in my eyes. FTSE, like, I mean,
Well, if you're looking for a trade there, the good thing about Europe is the fact that you don't have to keep as close an eye to the bond market, because I mean, gilts are yielding something like 69 basis points, right? So yeah. Anyway, let's move on to Asia and Pacific. Asia and Pacific, you've got the Nikkei 225 up 1.38%. You've got the ASX up 1.44%, Shanghai up 0.35%, and you've got the Hang Seng down 0.45%. Currency moves, but well, that's the Nikkei because you had broad-based dollar strength, and obviously because the yen is a funding currency, one of the strong movers in the FX market was the dollar-yen currency pair. But you also have the Hang Seng, which has a high beta to the Nasdaq 100 because of the tech concentration that it has in Tencent. So you had that one down.
But what's happening with Tencent recently? I haven't really been following the whole Tencent story. I mean,
Tencent, it was basically it's always been a very expensive tech stock, and you've also got it coming under regulatory pressure as well. I think the biggest thing dragging Tencent down is the fact that Naspers has decided to decrease their holding in Tencent.
but
So
isn't
it's
there
probably
like a
their sell.
minority decrease? I mean, like, isn't like 0.something%?
It is.
One of the shareholders.
Definitely it is, but then you need to consider the fact that no matter how small the shares, the amount of shares Naspers holds in Tencent is in terms of percentage, it's still a lot of money that's coming onto the market.
Like, it's insane. I mean,
Billions of dollars of shares are
mean,
being dumped.
I was shocked. I think the shareholder were like sold like 0.2%,
Uh,
and the amount they sold was like $1 billion. I forgot it was $1
Billion
billion
dollars.
rands or $1 billion, but
Hong Kong dollars.
I'm not sure.
Well,
It was just
it's
$1 billion.
as good as
Still,
the US
still a
dollar.
lot, really, compared to the rand. That's
Oh,
a
yeah.
lot of money.
Definitely. But anyway, let's move on to Africa. Africa, we've got Nigeria up 1.05%. You've got Nairobi down 1.78%. You've got Zim up 2.83%. Will you look at that? You've got the FTSE JSE top 40. Absolutely no movement.
That is
Zero movement from last week. But let me tell you an interesting story. In Zim. Well, in Zim you've got the macroeconomic story really picking up. and you sort of see that with the moves in the stock market, which is probably the best kind of exposure you're going to get to the positive sentiment around Zim. Although you had countries like China, the US, and Sweden coming in to invest in the private sector. There are projects going on with Victoria Falls.
Is it the one that's planning to build a new hotel, maybe something along those lines?
Yeah, 5-star hotels coming to the Victoria Falls. It's a speculator's buy right now. The only thing I'm skeptical about is the actual macroeconomic picture, because of the fact that, the government has an incentive to make it look more rosy than it actually is, because these guys are trying to win elections at the end of the day.
I mean, they also legalized, weed farming. I feel like that's a ploy.
Wait, that's another
election votes.
Insanity. But anyway, let's move on to Nigeria. Nigeria continuing its upward trend. Kenya sort of taking a bit of a breather, and you've got the Aussie bouncing around critical levels right now. So keep an eye on that market. Let's move on to currencies. Okay, in the currency market, you can see broad-based dollar strength. You've got the dollar against the Swissy being the biggest beneficiary here. Tabs, let's talk about FX. Main story was the 10-year treasury yield, which hit a high of 3.05%. But unfortunately closed the week below 3% because, that 3% yield was probably where a lot of algorithms started buying into the bond market. So you had it close at 2.96%. The funny thing is, it also came at a time when economic data out of the US was starting to show a few cracks.
As well as earnings, that's it, that same day.
Earnings?
Yeah.
Oh, yeah. There were a lot of earnings, but it didn't really... it did spill over into the currency market because of the switch from stocks to bonds at some point in time. But another interesting thing was we got US GDP coming out on Friday afternoon. We got a 2.3% read with an economist's forecast of 2%, which was a beat, but I usually don't look at GDP because GDP is a bit of a lagging indicator. So the main things I was looking at were the soft data like PMIs, manufacturing numbers, but and housing. You're starting to see a few cracks in the US economy. But let's move on to emerging market currencies. Emerging market currencies were affected by the same story, which was broad-based dollar strength. And the thing with the emerging market currencies is the fact that most traders are in the market for the positive carry that they get on emerging market currencies. So you've got countries like South Africa and Brazil, which have interest rates over 6%. So people very long those currencies, and they collect the positive carry because of the interest rate differential between the emerging market and the US. So especially with carry trades, you see these things unwind very quickly because you've got a large number of institutions in these trades. It really helps my dollar rand position, so I'm not complaining.
No, especially dollar rand, what's been happening in the past week, the whole strikes, and was it even mining charter?
Definitely.
Something in the headlines about mining charter and something?
The mining charter. I didn't actually read it.
Yeah, but there was a lot happening in South Africa affecting the rand this week.
Oh yeah, definitely. We're always affected by political noise. But let's look at the numbers. We've got the US dollar against the Russian ruble up 1.41%. You've got the US dollar against the Turkish lira down 0.91%. You've got the US dollar against the Brazilian real up 1.24%. US dollar against the Mexican peso up 0.44%. And US dollar against the South African rand up 1.92%. Right, commodities. The commodity space was very interesting. You've got US wheat, which was the biggest gainer, up 7.5%, followed by US corn, up 5%. Coffee, up 5% as well. But one commodity I'm really interested in right now is oil, which had very mixed trade this week. What do you think of the trade in oil?
Oil, I think I'm still long, to be honest.
Still long oil?
Definitely long.
Definitely.
Definitely.
Okay.
I feel like there's still more upside on long from a technical perspective.
Technical
I
perspective.
wouldn't be panicking so much.
Uh-huh.
I mean,
I'll tell you
especially-
something. Okay. Sorry, you were saying?
No.
Okay. Well, with oil, what I like about this story is obviously it's been on an uptrend the whole time. You've got, and you've also got Trump possibly coming out with more sanctions on Russia. You've got the Syria strikes going on in the background. So, yeah, very, very, very interesting trade.
Okay.
Big story coming out of the White House as well is discussions around trade, which have obviously propped up the prices of soft commodities, and
I mean, markets are discounting the geopolitical risks, so precious metals are falling out of favor. Exactly.
there we go.
That is also a factor. I mean, it should be interesting to see what kind of action we see. With Trump considering more sanctions on Russia.
Definitely.
I mean, this coming week. It's definitely to look out for.
That actually squeezed me out of my gold position. I will say, I'm no longer long gold.
This week was really interesting.
Lost a lot of money.
I remember at some point this week where Bitcoin was considered to be the safe haven this week.
Safe.
I mean,
I don't believe any of that.
No, you don't believe anything, but I remember this other day when everything was down. Gold was down, stocks were down, currencies were down, cryptocurrencies were up. I mean,
yeah, that's true.
time may be changing.
Here's the thing. A lot of people, I think, during that time started confusing correlation with causation. Because cryptocurrencies were on a tier, well, they've been on a tier for the past 2 weeks, and then the one day when everything else is down and cryptocurrencies are up, people are like, oh no, cryptocurrencies are the safe haven.
Of course, it's a speculation market, but it happened according to that day,
I guess so, but the good thing is you've led us right to it. Let's talk about cryptocurrencies. Cryptocurrencies, as you can see, we've got Bitcoin up 4.22% over the past 7 days. But Ethereum, well, let me correct myself. Ether up 6.77%. Ripple down 3.99%. What do you think of that story? Bitcoin up, Ripple down.
I'm actually shocked Ripple's down. I mean, everything else is up, yeah, but except Ripple. I'm actually shocked. I mean, what is the main cause?
My thinking is, if you saw the action in cryptocurrencies 2 weeks ago, you saw a lot of money coming into the altcoins, whilst you saw the rally in the main coins. They moved up, yes, but not as much as the altcoins. My thinking is that was institutional buying in the altcoins, because institutions have an ability to understand the altcoin markets more than the regular retail investor. So altcoins came up because of institutional buying. I think this is just a correction in time, or just a pause in institutions entering positions. So it'll be interesting to see how that story develops.
Definitely. I mean, I'm pretty sure Bitcoin, it should be approaching key levels from now.
It is. 10,000 is probably the next level people will be looking for. I mean, if you see some selling there, it might just be people's orders being triggered, you know. Some people bought in at the bottom and might want to take some profit off the table. I'm also eyeing $1 on Ripple, which I will say I also got into near the bottom, I think in the 60s. Got into some Ripple. But hey, we'll wait to see how that goes. With that brings us to the end of our weekly market update. Thank you very much. Please use the comment section, like the video if you like this content, and we will see you next week.